2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, Russell 2000 deeply in the red right now, right to the numbers. S&P down 152, trading below 5,200, 51.90 right now, down 2.9%. The Dow now down an even 1,000 points, down 2.5%. We've got NASDAQ down 590, a decline for the NASDAQ Composite Index of 3.5%. The NASDAQ 100 index down 3.1%, while the Russell 2000 is down 3.3%. That Dow worth calling out again right now, down by 1,008 points, down 2.5%. 10-year 3.77% with a 2-year yielding 3.89%. Spot gold down 1.5%, 24.05 the ounce, while West Texas Intermediate crude down 0.6%, 73.11 a barrel. Bitcoin cannot ignore Bitcoin, down now by 9.3% at 53,611 on Bitcoin. A renewed bout of volatility hitting markets around the globe as concerns about a slowdown in the U.S. economy spur warnings that this year's stock rally has gone too far. Among mega-cap tech names, NVIDIA down now by 6.6%, Apple down 5.5%, Microsoft down 3.6%, and Tesla lower now by 4.8%. Again, recapping steep losses for the U.S. stock market, S&P down 3%, 10-year 3.77%, the 2-year 3.89%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bit of a crazy day, I feel like, for the semiconductor space. I don't know if you noticed it, but the SOX actually was positive for like a second.
I did not notice that. I did not notice that.
Like
I did notice that NVIDIA was the biggest drag on the S&P 500. At one point, I think $380 billion in market cap
was down 15%.
Knocked off NVIDIA. Yeah, so that's kind of the chip maker to which I pay the most and almost all of my attention, but I know there are others.
Like an Intel. Hey, it's still up 100% so far this year, so let's get to it, because NVIDIA did slump the most in more than 4 years. The information coming out saying that NVIDIA's upcoming artificial intelligence chips will be delayed due to design flaws. The information citing 2 unidentified people who helped produce the chip and its server hardware. So
it's trading under $100. Under $100 a share right now for NVIDIA.
That's kind of shocking. All right.
It would be shocking if Abigail Doolittle hadn't told me last week or 2 weeks ago that this was going to happen. She's a technical analyst,
so
right?
She
was looking at the chart
levels.
Technicals, and she, at one point, I think it came under a level she was watching, like 117 or 114, and she said, oh, it's formed like a head and shoulders, or there's a breakaway here, I don't know the terms, and she said it's going to go below 100.
Definitely below its 90-day moving average. All right, so let's get some sense of what is going on in the semi-space overall, specifically NVIDIA and a few of the other names. Back with us, as he always does, to help us make sense, Bloomberg News U.S. semiconductor and networking reporter Ian King. He's out there in our San Francisco bureau. Ian, good to have you here.
And looking good. Yeah, by the way, you're on TV right now, right? You're looking like a young, bald Sean Connery, right? The beard very much works for you.
Well, I don't know what to say to that.
As only Matt Miller can do. Ian, what do we know, first of all, about NVIDIA and this delay? What do we need to know? How big a deal is this?
So there are a lot of reports out there. There are a lot of reports that have conflicting pieces of information. Some of which would indicate this is an enormously serious situation that will have, months of work ahead of it in terms of sorting it out. We have other reports out there that are saying, oh, actually, it's relatively minor. There are lots of different versions of this Blackwell chip, and the reports that are out there cite different things. I think what you guys pointed to earlier actually should be the way to approach it, which is when this stock opened, it was really bad, right? It was down a lot. And it got down as low as, what, 15%? Mm-hmm. That's kind of disaster. Oh, my God, this is the end of the run for this company. Settled back at a sort of down but not panic-stricken level. And I think that's a reflection of what we've seen from a lot of Wall Street analysts who've done the work, as we're doing the work, to try to find out what actually happened and are saying, yeah, this is not great. This is an example of, problems happen. This is engineering. But don't panic, this company is still in the lead and nobody's going to catch it anytime soon.
Certainly not Intel, and that stock is down 60% year to date. Obviously, it's far smaller than NVIDIA. It's only an $85 billion market cap company now. compared to a $2.6 trillion company that is NVIDIA, or was this morning. Ian, I don't follow the company, obviously, as nearly as closely as you, but I hear every few months Pat Gelsinger out with a new plan to revive the company. I'm sure he has longer-term plans, but is he doing a bad job as the CEO? I mean, is that what this stock price is telling us?
What the stock price is telling you is that this plan that he put in place from the minute he walked in is not delivering the results or any sense in investors' minds that it's making progress towards the lofty goals that he set out. I mean, Thursday, the only good thing that happened was that they didn't miss a revised down revenue outlook. Everything else, every measure, everything that they said caused a rolling thunder of increased concerns. And the notes that if you did, and the reactions are pretty dark. There are people starting to say, is this a going concern? Is this an existential crisis for this company? So while he tried to fight back on the call and tried to be like, hey, things are still on track, this is just a rough quarter, the reaction was like, Pat, we've kind of heard this before. We need more positive signs that the long-term fundamental issues that you've got are being fixed.
Ian, hang on for a second. Just want to mention a headline crossing the Bloomberg terminal and shares of Alphabet taking a bit of a dip on them. Google losing the Department of Justice antitrust suit over search. The Google judge, or the judge in that case, finding that the search giant violated antitrust law. So we're looking at shares of Alphabet down about 4.7%. So, a down day, yes, but dipping down a little bit lower on that news. Ian, Pat Gelsinger, back to chips we go. Intel specifically, 3.5 years on the job as CEO. Is it time for a change in the C-suite?
All I can do is point out that a lot of the issues that Intel faces, whether it's the production technology, whether it's the product choices, whether it's the amount of factories they put in place, those were decisions that were made under his predecessors. Right? And because of the nature of the chip industry, I mean, the analogy that I saw in a note was like, it takes a long time to turn around a battleship, but right now it feels like that battleship is sinking. So there's a mixture of things there that would go into that, answering that kind of question, and the board would be the arbiters of that.
Well, what about the massive investments that they've made, or the investments that they've planned? Obviously, this is the kind of business where you have to start breaking ground on a new fab years ahead of, production. And they have, I know at least in the Columbus, Ohio area, made plans to build a huge capacity. Is that still all going to come to pass?
And that's a very good question. I mean, what we've said all along in these discussions is what the semiconductor industry does is they build what's called the shell. They build the building, right? The steel frame, put all of the, the infrastructure in it. But what they don't do is put the equipment in, because guess what? When a piece of equipment costs tens of millions of dollars and you need 30 or 40 of them for a product line, that's where the money is. That's what costs the money in the factory, and that's what immediately hits you in terms of the charges you have to take. So if you can't be sure that you're going to run these things 24/7, you don't put them in place. You build a shell and then you let it sit, and then you wait until you think your business is going to come back, and then you fill it up. So what will really tell us whether this sort of turnaround plan is happening or not, and these factories are going to be built, is when we see that equipment being moved in. Right now, Ohio is not at that point. Look at the factories in Chandler, Arizona, look at what's happening there, and that'll tell us whether Intel is really committed to this massive expansion and is going to deliver on it.
Intel, Ian, the stocks is down about 24% from the early July high. Just got about 25 seconds here. We talk about cycles with you all the time. Is it telling us that just things are slowing down more broadly and the demand is down? Real quickly.
No, this is an Intel problem, and they've cut their revenue, they've cut their dividend now. So a lot of funds, even if they wanted to own Intel, can't. So that's what's going on there. There's a lot of problems that are very.
But even the stocks being
company.
down that much isn't telling you anything that's worrisome.
I mean, how much money came in? So it's a very cyclical industry. So you're absolutely right in that regard.
All right, going to leave it there. Ian, as always, Ian King of Bloomberg News, watching the semi-space. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Alphabet shares now down by 4.6%, a key victory for the Justice Department. We learned moments ago that a federal judge in Washington has ruled Google's payments to make its search engine the default on smartphone web browsers violates antitrust law. Judge Amit Mehta in Washington said that the Alphabet unit's $26 billion in payments effectively blocked any other competitor from succeeding in the market. Again, Alphabet shares trading lower right now. We've got Alphabet down by 4.6%. Dell Technologies cutting jobs as part of a reorganization of its sales teams that includes a new group focused on artificial intelligence products and services. Dell now down, part of a broader tech sell-off today. Dell down by 4.9%. Shares of Apple's suppliers are slumping after Berkshire Hathaway over the weekend nearly halved its stake in the iPhone maker. Taipei-listed iPhone assembler Han Hai Precision Industry and chipmaker Taiwan Semiconductor Manufacturing both trading lower. Right now, Apple down 5.5%, Han Hai down almost 7%, and Taiwan Semi trading lower by about 2.3%. NVIDIA shares. The company's upcoming AI chips will be delayed due to design flaws. Analysts see the potential for a short-term revenue impact, although it could be short-lived as NVIDIA customers continue buying other products. NVIDIA shares now trading lower by 7%. Crude oil extending losses to a 7-month low among oil giants. We have got ExxonMobil down 1.3%. Chevron lower by 2.5%, and BP down by 3%. Those are our top company stories at this hour. I'm Charlie Pellet, and that is a look at company news.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, more Business Week coming up in just a moment. Carol Master along with Matt Miller in for Tim Stenevec on this Monday. Right now, though, back to World of National News and back to Nancy Lyons. She's in D.C. Hey, Nancy.
Thanks, Carol. President Biden is meeting with his national security team right now to discuss growing tensions in the Mideast following the deaths of leaders with Hamas and Hezbollah. State Department spokesman Matt Miller says the U.S. is doing all it can to prevent Iran from taking retaliatory action.
The message that we are consistently sending is don't take this step. You don't need to. It doesn't serve anything, and it only puts the entire region at risk.
Again, the State Department's Matt Miller. Debbie is now a tropical storm and pounding a large part of northern Florida with heavy rains. It came ashore early this morning in Florida's Big Bend area as a Category 1 hurricane. Power is out across a big part of Florida and coastal areas of Georgia. South Carolina is also braced for outages. Matt Long is with Dominion Energy in Columbia and says they work year-round to keep down lines to a minimum.
The number one cause of power outages during a storm is going to be trees and limbs hitting lines. And so year-round, our crews are out on sunny days to make sure that those trees are trimmed back so that there will be a reduced impact once that storm does come through.
Matt Long with Dominion Energy. Debbie could dump 2 feet or more of rain this week in parts of Georgia and the Carolinas. Airports in Orlando, Tampa, Miami, and Charlotte have all seen a number of cancellations and delays. Presumptive Democratic presidential nominee Kamala Harris is said to be close to picking her running mate. Reuters says it's between Governor Josh Shapiro of Pennsylvania and Governor Tim Walz of Minnesota. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Matt.
All right, Nancy Lyons, thank you so much. We're getting ready to wrap up this hour of Bloomberg Business Week. Having said that, one other aspect to all of the selling and trading that was going on is that Schwab and Fidelity had a rough time.
Yeah, huge outages there. Especially, it happened right at the open this morning when stocks were taking such a big hit. The S&P was down 4.5%, 4.25%, I think, at the open. The NASDAQ was down 5.5%. And of course, that means a lot of traders, retail, are trying to log on and either buy or get out of certain positions, whatever they want to do in that much volatility. And if you try to log on to Fidelity or to Schwab and you can't get into your account to trade, that makes customers very angry.
Well, you actually caught up with this. Was it the CEO of Vanguard?
The CEO of Vanguard, and he said they had problems too.
Yeah.
Although he told us at the time that we talked to him, I think it was about 10:30 this morning, so an hour into the trade, 98.9% of their customers customers who tried to log on could. So only 1.1% were having
that's minor.
issues. And also Vanguard is a different kind of story, right? That's not a trading account.
No,
if you're
no,
invested with Vanguard, Jack Bogle, it's buy and hold forever.
Right, by the markets. But it's interesting, right? That you think that these systems are in place no matter what's going on, the level of activity, but it was pretty extreme this morning.
Well, and you and I have worked through a lot of periods of real extreme volatility. Yeah, and this always seems to happen. You see Robinhood was off over 20% at the open this morning. And I wonder if that's also because traders are trying to get in there and maybe are not being able to make the moves as quickly as they wanted to.
Right, and this whole idea that you should be able to trade at any time, and then all of a sudden you can't.
I should note that Robinhood also the drop there could be very closely related to Bitcoin, which took a huge swoon as well. And then you saw a lot of stocks that are related. You can trade Bitcoin on Robinhood. You can trade Bitcoin on Coinbase. They all kind of collapsed.
Yeah, at its lows, down 21% today. Robinhood now down just shy of 9%. All right, folks, that's going to do it for this hour of Bloomberg Business Week. If you're watching on television, coming up next is the close. They're going to continue to track the markets, as will Matt and I. Also coming up, we're going to get into certainly the earnings fundamental. Gina Martin Adams is coming up.
Absolutely. We're going to talk about whether companies are getting out of the earnings recession that many of them have been in for the past 6 quarters.
All right, more to come, certainly. Carol Massar along with Matt Miller, and this is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are just 60 minutes away from the closing bell on this Monday, August 5th. Carol Massar along with Matt Miller. He is in for Tim Stenivek, who is off this week. Already chatting away with Gina Martin Adams.
Well, I'm trying to figure out, there's a great function on the Bloomberg. If you pull up any equity, like Google, for example, then you can type BICO, go, and then you get the Bloomberg intelligence analyst that covers that stock. So it's a great way, and you get all the research as well. So it's a great way to dig deeper into a company's fundamentals.
All right, and we're going to dig deeper into earnings fundamentals in just a moment when Gina joins us in just a second. So we're going to stay on the markets. We're going to get the latest on the rates trade. We're going to talk a little bit more about the role of the Bank of Japan. Also, the risk-off trade means, you talked about this in terms of Robinhood, people fleeing from Bitcoin or everything kind of crypto.
Yeah, absolutely. I mean, Bitcoin has been a great risk indicator. When we're risk on, it's been soaring. And to me, covering Bitcoin now for like 13 years, it's amazing to see it at these heights, even after the big drop. But coming down below 50,000 definitely was a moment.
Didn't we at one point talk about crypto as a safe haven? Didn't we have that argument for a little bit?
Yes, for sure. It depends where you are, right? If you're in a country where inflation is so bad that you need like a shoebox full of cash to buy a pair of jeans,
it's a safe haven.
Then it's maybe better than whatever your local currency is.
All right, we got a lot to talk about. We're also going to get a view from the C-suite on kind of the market environment, the economic and business environment. First up, though, back to the markets we go, and an update with Charlie Powell.
All right, thank you very much. 59 minutes to go ahead of the closing bell. Do want to begin with Bitcoin. You guys mentioned it. Bitcoin down now by 10.2%, 53,150 right now on Bitcoin. Stocks selling off, the Dow, the S&P, NASDAQ, all in the red. S&P right now down 171, drop now of 3.2%. We've got the Dow lower by 1,076, a drop on the Dow of 2.7%. NASDAQ lower now by 658 points. The selling continues, down by 3.9%. The NASDAQ 100 index down 3.4%. The Russell 2000 down 3.7%. 10-year yield 3.77%. The 2-year 3.87%. Gold down $37 the ounce, 24.05, a drop there of 1.5%. West Texas Intermediate crude oil down 0.2%, 73.34 for a barrel of WTI. But again, Bitcoin getting one's attention today, lower now by 10%. So it is a down day, a renewed bout of volatility hitting markets around the globe. Lindsay Rosner is head of multi-sector investing at Goldman Sachs Asset Management.
The market is getting into a healthier zone, and markets don't move, even though I think we've been pretty used to it recently, in a straight line up. We have to understand that these kind of drawdowns and retracements happen, and this is why, from an active management seat where we are, we want to have the steady hands in the market to add where it makes sense.
Lindsay Rosner of Goldman Sachs, and of course our Gina Martin Adams will have more on the markets in just a moment. Among specific tech names, NVIDIA closely watched today, down 6.7%. Apple shares down 6.6%. Microsoft down 3.3%. And Tesla now tumbling by 5%. So again, recapping, equities sell off. S&P down 3.1%. The 10-year 3.77%. The 2-year 3.88%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, she has been consistently reminding us that we are seeing earnings growth, with analysts raising estimates and growth outside of the Magnificent Seven, including growth in financials. She is out with research today saying stop blaming earnings for S&P struggles. It's mostly about tech. Back with us is Gina Martin Adams, who is Bloomberg Intelligence Director of Equity Strategy and Chief Equity Strategist. She, too, has had quite a week or so. She's back here in our Bloomberg Interactive Brokers studio. I keep leaning on you. We keep leaning on you because I feel like I want to keep understanding fundamentally how companies are doing.
Yeah, and I think that's fair. Thank you very much. I don't know that many people are that interested in the fundamentals right now. So
We
we're
should
rare.
be, though.
Nonetheless, I do think that most of this, if you go back to when this really started, it really started with tech valuations at extreme levels, earnings season coming. All the tech stocks, for the most part, with the exception of a few key, like Intel,
Yeah. Big outlier.
They generally beat expectations. But there were nuances, and did they beat on their cloud component? That's the Microsoft story. On the Amazon story, we nitpicked into little details in the earnings statement. And that's just a symptom, I think, of a market that got too irrationally exuberant about this space. The companies are still doing fine. Fundamentals are still pretty solid. They're guiding us to expect a little bit less margin growth going forward.
Yeah.
And that's left us with this kind of dearth of where do we go next? We are seeing some emergence of positivity in the rest of sectors, but I think we're at a point in time where we're not terribly confident that that's going to last, and at least in terms of market psychology, that's creating a lot of weakness and some degree of panic in equities. As the big stocks turn over, where do investors go? They're not really looking at buying a whole lot of these risky stocks that have lagged in this cycle.
Well, when you say risky, are you talking about the S&P 493?
Yeah.
Are the other 493 stocks little risky companies compared to the big
It is
mega cap
amazing,
7?
right? That's basically how it's played out. Is the 7 have become so big and so dominant and have gathered so much mind share, market share, investor dollars that they are their own segment.
And they've represented all of the earnings growth also.
Absolutely. Yeah. All of the earnings growth for the next 6 quarters. I think that's so important and so key is when you look at the earnings growth trends, you've had this mass divergence between the 7 and the rest. And sure, there's some of the rest that have done fine. But the 7 have so thoroughly dominated earnings growth that's where we've been focused, all of our attention has been focused. Now the 493 are emerging. Mm-hmm. This is the great news. I think we still need to gather confidence that emergence can endure over the next several quarters, and that to me is what last week was about. Is the tech stocks were already melting down. We were starting to get a little confidence that the 493 might make up for some of that tech loss, when suddenly you got some pretty nasty macro data, and everyone said, oh no, the 493 can't possibly survive that kind of macro
Are
data.
you not so sure going forward? Because we've talked a lot about that beyond the big tech, that we have seen earnings growth elsewhere, and that analysts were ratcheting up or moving up estimates.
Right.
And that gave us some optimism.
We're still seeing that. We're still seeing it in guidance. Our guidance momentum score for 3rd quarter actually continues to improve. So we're not seeing any evidence that would suggest the macro is yet overwhelming even the 493's individual company performance or improvement or general trend growth into 2025. I am worried that maybe we will see that. If we get bigger deterioration in the job market, what does that do to filter through? But we're not seeing it yet. And, I've learned a long time ago that my forecast is worth about as much as, the 2 cents on the street. So I will be happy to just take the guidance from the internal dynamics of the market itself. If the broader 493 starts to turn over, then we have to generally change our strategy.
By the way, there used to be a great function on the terminal, loss go. So I could pull up like Google and I could type loss go and it would show me a stock chart and then when they fired people.
Yeah.
Do you, and I'm asking this because, the unemployment number rose to 4.3%, but in listening to Powell or in talking to Mike McKee,
Right.
I know that a lot of that is because the labor market has grown, the supply of workers have grown. It's not because of mass layoffs.
It's different.
And you haven't seen that in.
No.
And you
No.
point that out.
And I think
It's
that's
not
I like to watch challenger layoffs and initial claims, actually. I think you could get a lot of really false signals out of the unemployment rate, so I tend to view that as a lagging indicator and generally ignore it, understanding that the market occasionally keys in on that as the end-all be-all, as in Friday. But nonetheless, when you look at challenger layoffs and initial claims, we've had little bumps up this year, but they still fail to surpass the bumps that we saw in 2022 or 2023. So it appears that in the broader landscape of things, we're going through another sort of mini macro weakness in a series of mini macro hills that we've had to sort of surmount or surpass over the course of the last 3 years. This has been a very consistent story in the market, is the macro's just weak. And sometimes it gets a little weaker, scares us, and it still stays weak.
Well, this is what, and you keep bringing this up. Like we've all been around for a little while, and we've seen a lot of different market cycles. And this doesn't feel like great financial crisis.
No.
This doesn't feel like a COVID outbreak, a global pandemic shutting everything down. And I understand why the markets fall off. It doesn't feel that nervous. However, things can, when they start to go bad, can move badly quickly.
They can. And the interesting thing about this cycle that I think has been so hard for so many people, myself included, is that it does appear to just be this rolling weakness followed by mini strength rolling, and it's this constant rolling environment as opposed to a big cyclical.
Is that better
Rolling environment or rolling recession? That's what Yardeni's been saying, right?
It does feel like something like a rolling recessionary kind of experience with many bouts of optimism that emerge occasionally. And in the S&P 500, that optimism was really entirely focused on the Mag 7.
Can a rolling recession, because you've talked about earnings recession already happening, is it a better environment for the equity market because it kind of moves around?
It does appear that at least so far, it seems to be resulting in more corrective processes that refresh the bull trend. I mean, we've definitely seen that since the 2020 lows. We had a pretty big corrective process in 2022. We had another 10% downdraft last year. We're in the midst of yet another 10% downdraft this year, and yet we're still trading above our 200-day moving average on the S&P 500. So at least so far, it's tough to stomach for a lot of people.
Yeah.
But that sort of lack of, we just can't seem to develop the irrational exuberance for the broad market at large. I mean, certainly, even if you go back a month ago, you wouldn't hear everybody say, I got to own the S&P 500. They just had to own the Mag 7.
Yeah.
So there was a pocket of optimism, but did it overwhelm the equity market at large, which usually characterizes tops? I would say no.
All right, going to leave it on that note. Thank you, Gina Martin-Adams, Bloomberg Intelligence Director of Equity Strategy and Chief Equity Strategist, joining us right here. All right, that's U.S. earnings, thinking about the equity market. Let's get to what I feel like is the belle of the market ball, and that is the rate environment.
Yeah, absolutely. I mean, to me, it was made very clear this morning that we were watching an unwinding of the yen carry trade.
Yeah.
And I wish there was a way, maybe I just don't know and there is, to gauge how big that trade is and to watch it over time. I mean, you could look at the balance sheet for the Bank of Japan, for example, but
I don't know.
if only we had someone to ask.
We do have two people to ask. Let's get to it. With us is Bloomberg Economics Chief Economist Tom Orlik in our D.C. Bureau and Bloomberg News rates reporter Michael McKenzie here in our Bloomberg Interactive Broker studio. Michael, good to have you back. Tom, good to have you back as well. I do want to ask, and feel free to bring in what Matt just asked, but I am curious about the rates trade today and how significant it was, and does it tell you that the Fed made a mistake last week?
Well, the rates trade today has certainly been wild. You've seen another 30 basis point range in the 2-year, which kind of is just extraordinary volatility. And the 2-year is now a little bit higher in yield on the session, 10 years a little bit lower. We were briefly positive between the 2-year, 10-year curve. We've now come back to being about minus 10, 11 basis points. So you could sort of look at it and go, well, nothing's really changed. But actually under the surface, a lot has changed. And I think it's coming really from, as Matt said, Japan. When we've seen the carry trade unwind, and I say this as experience because I was on a trading floor in 1998 in Tokyo when LTCM blew up, and I watched Salomon Smith Barney unwind a huge amount of carry trades. It just essentially compels everyone to go and buy what is the one thing I can own, and it's treasuries. And you saw that. You saw the Tokyo stock market drop 12% on Monday after a 6% drop on Friday. This is a huge unwind going. As someone said about a year ago at Jim Grant's Observer conference here in New York, he said, Japan is the most dangerous peg in the world. And I always remember that a year ago because he was sort of setting in terrain that when the Bank of Japan finally starts to go, it's going to have global consequences. And it's having that now for the Fed. So the Fed, of course, as Austin Goolsbee said today, they're not going to react to just one number. Payrolls has a big 100,000 plus or minus discrepancy. So they're going to have to wait for the data. What I think would worry the Fed right now, though, is it sort of harkens back to what we saw in 1998. When these trades start to unwind, someone is left holding the bag. And just how big a financial accident is out there. Because that's when it becomes systemic. That's when markets stop functioning properly. We've heard a lot of people speak on the Bloomberg TV and radio today talking about liquidity.
Right.
As long as liquidity in markets is fine and markets can function, and again, as Gina just said, the S&P is nowhere near its 200-day moving average. This is a contained correction that's working its way through the system. If it stays that way, the Fed can keep watching the data, and then the bond market will be judged on whether or not they've got too far ahead or not.
Tom Orlick, I want to bring you in on this in terms of you're listening to Michael McKenzie talk, and I am curious also about kind of the global economic backdrop and the differences that we're starting to see. Come on in on here, and what's top of mind for you?
So it's an interesting moment, Carol. We had the Fed last week send some pretty dovish signals. Powell was pretty clear that a rate cut was on the agenda for September. And then we had the US unemployment data come in, and that big downside surprise on the jobs numbers and upside surprise on how high unemployment had headed. And that kind of made the markets believe that the Fed had made a mistake. Perhaps the Fed was behind the curve. Perhaps they'd made a mistake by not cutting in July. Perhaps they need now to be more aggressive, delivering maybe a 50 basis point cut in September, maybe an intermediate cut even ahead of that September meeting. And then Japan, as Michael was suggesting, kind of compounds and accelerates the dynamic in global markets, because the yen carry trade had been a huge driver for prices of risk assets through that whole period where interest rates in Japan had been pegged at zero, and the yen had been reliably depreciating. And suddenly, with the Bank of Japan hiking and the Fed suggesting it was going to move pretty quickly in the other direction, we saw yen strength, expectations of higher yen rates, and that yen carry trade began a rapid unwind, hitting the Nikkei really hard and hitting global risk assets. So that's the environment which the Fed and which global investors are now confronting. It's going to be an interesting few weeks ahead.
Michael, walk us through, I guess a carry trade is a broad term for, it could be, you could execute that trade in a number of different ways. Yes. And equally, I'm sure you can unwind it in a number of different ways. But is there any way to explain to our listeners how it gets unwound and how long that takes? Because this is not just 1 year of a carry trade. This is kind of a generation of traders who have become addicted to this pool of cheap money out of Japan to buy assets,
high yields,
in higher yielding economies.
It's interesting, actually, because when we had the Mexican election result, the carry trade got a bit of a wobble in July, and then suddenly it came roaring back, and it got very close to the peak just before the Mexican election, and then it's just gone down again, and it's gone down hard. So you've seen, I mean, clearly, one way to think about the size of the carry trade is look at the move in the Japanese yen. It's moved from 162 yen to 142 today. That's a huge move.
In like 2.5 weeks.
Yeah, it's just huge. But it's, again, if you go back to LTCM, that happened in a couple of days, like a 24-hour period. So you can see the comparison there. I think in terms of the carry trade, it's essentially Japan, it doesn't cost you any money to borrow in yen. It's zero interest rates for years, until recently when the Bank of Japan began raising rates. But even then, it's still very, very low compared to the rest of the world. So you can effectively borrow in yen and go and buy T-bills in America and pick up 5%. And as long as the currency keeps weakening, you're happy. So that's why
it should have done that.
It becomes a self-reinforcing mechanism because the yen keeps weakening. And then suddenly when UEDA last week said, oh, actually, we're raising rates and we're going to keep going potentially, suddenly everyone goes, oh, this is going to hurt me. And the best analogy I can think of is you've got to think about markets. It's all about crowds. And, you know, it's sort of, imagine a group of people sitting around a table eating donuts. Then one person decides, you know what, I've eaten a lot of donuts. And I'll use the example of Warren Buffett owning Apple. He'd eaten a lot of donuts and, you know, and suddenly after a 900% gain on his Apple stock, he does what any good investor does. They rebalance the portfolio. His Apple holding was way too big compared to the rest of his portfolio. And so he moves and leaves. And then suddenly everyone sits at the table and goes, oh, I got to leave too. And it's that rush. And the carry trade gets really, really bad because liquidity is great when things are nice and calm. When volatility starts to get going and people start heading for the exit, the price of liquidity
imbalance, right?
becomes really, really expensive. And that's what people are discovering now.
So, Tom Orlick, because part of what I think is smart to have right now is kind of what is the economic backdrop globally, right? We've been talking about how the U.S. economy is doing really well compared with the rest of the world. Maybe we're starting to rethink that. We just talked earnings with Gina Martin-Adams about the U.S. earnings picture, and yes, a lot is the Mag 7, but there's also been some earnings growth in the rest of the sector, in other sectors. The question is whether that continues. When you look at the global economy, is the global economy coming undone? Is the U.S. economy coming undone?
It's interesting, Carol. I think that the macro dynamics look very different in Japan to how they look in the United States. We think about what's happening in Japan, well, it's kind of a perfect storm for the Nikkei. You've got a yen going from weakening to strengthening, which reduces foreign earnings for Japan Inc. You've got interest rates going from 0 to something above 0, which increases the opportunity cost of holding equities. And you've got growing concern about weakness in the United States, one of the biggest customers for Japanese firms. So put all of that together, and it's easy to see why you had a pretty outsized reaction from the Nikkei.
What do you think about... sorry, go on.
Oh, for the United States, though, many of those vectors are actually pointing in the other direction. We've got a weakening dollar. We've got falling interest rates. We've got an economy which, even on the sort of more pessimistic forecasts, faces something which looks a bit more like a kind of bumpy landing or a mild recession than a severe recession. Global macro environment, I'd say it was mixed, but I certainly wouldn't say that the drop in the Nikkei was a kind of canary in the coal mine for global macro.
No, but that's, I mean, when Carol talks about the nervousness around the great financial crisis or LTCM or COVID, that's what last night's Nikkei drop reminded me of. Still, I woke up this morning and thought, that's crazy. I mean, we still added jobs on Friday. I know it wasn't as many as we thought, but unemployment at 4.3% is not awful. Why are so many people calling? This morning I watched Jeremy Siegel on CNBC call for an emergency rate cut of 75 bips and then another 75 at the regular meeting. That's way overblown. Is anyone really, Tom, calling for an emergency rate cut, or are some people saying it may happen, but it's a horrible idea?
So it's interesting. Michael mentioned LTCM and the yen carry trade. And of course, the yen carry trade also played a cameo role in the global financial crisis. There was a kind of dynamic back and forth between deteriorating US credit conditions, unwinding of the yen carry trade, further deteriorating US credit conditions, and the collapse of the subprime mortgage market. So if we look at the last 20, 30 years of sort of global economic and financial history, and we think about the yen carry trade, there is a reason to kind of be paying pretty close attention to this right now. Now, I should also say that financial markets are more dynamic and more responsive to sharp changes in circumstances than economists are, right? When the markets turn down, often that's before the economic forecasts have turned down. So when the markets do have these moments, it does sort of behoove us to pay pretty close attention. All of that said, Matt, I share your assessment. We think U.S. unemployment is heading to 5% in 2025. That's a pretty high number relative to consensus. But we don't think that's a catastrophe, right? We think that's a bumpy landing, a mild recession. It's not a catastrophe for the U.S. economy. It's not a catastrophe for the world.
Michael McKenzie, saving you the last 45 seconds. Does anything out here in terms of what you're seeing seem catastrophic?
No, not at this point. I think the market has certainly got itself worked up, trying to work out just how bad is this carry trade unwind going to continue. And
do you expect it to continue?
I think it will. I think people need to probably recalibrate and consolidate their positions once these things start. It's been so cheap for so long. There's a lot. It's going to take a while for this to burn itself out. You may get days where it comes back a bit, correct, but generally this has to burn itself out because central banks are on the move.
100%, 90% of what we're seeing today in the move in terms of Treasury, is it because of the carry trade?
I think a lot of it played a role. We got down to 365 on twos. We're now back around, 388, I think?
Yeah, 388.
So, yeah, and then don't forget, we're going to have auctions coming tomorrow, Wednesday, Thursday. There's very little economic data, only a couple more Fed speakers. Really, the bond market's on hold until we hear from Chair Powell at Jackson Hole, and it's just going to be reacting to whatever markets are doing here in terms of risk assets and liquidity. Again, if liquidity continues to tighten, that will raise the stakes for the Fed here.
All right, super smart. Guys, thank you, both of you. Incredible. Bloomberg Economics Chief Economist Tom Orlick out there in our D.C. Bureau, and Bloomberg News Rates reporter Michael McKenzie right here in our Bloomberg Interactive Broker Studio. All right, everybody, coming up, we're going to get a C-suite view of today's environment. First up, though, back to the markets, an update with Charlie Pell.
Hi, thank you very much indeed. Recapping, resetting here, 35 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, steep losses defined as 2.7% or more on the Dow Jones Industrial Average. Right now down 1,068 points on the Dow. We've got the S&P down 169, decline there of 3.2%, while the NASDAQ Composite Index is down 630, a drop right now of 3.8%. The Russell 2000 Index of small cap shares trading lower by 3.6%. The 10-year at 3.77. We've got twos at 3.88%. Gold down $35 the ounce, tumbling 1.5%. West Texas Intermediate crude down 0.1%, while Bitcoin is now down by 10%, 53,314 again, underscoring Bitcoin plunging by 10%. S&P 500 index, as I mentioned, down by 3.2%. Among mega cap tech names, NVIDIA down 7.5%, Apple down 6.2%, Microsoft down 3.3%, and Tesla down by 5.1%. Now, Intel building on Friday's 26% plunge, Intel down another 7.3%. Briefly, a key victory for the Justice Department. A federal judge in Washington has ruled Google's payments to make its search engine the default on smartphone web browsers violates antitrust law. Alphabet shares down 4.3%. S&P down 3.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's not forget, amid the market selling and the focus on markets today, rightfully so, but companies are still reporting earnings and outlooks, which helps give us some additional data points to piece together today's environment. I actually love earnings season.
Yeah, me too. But I was going to point out,
what?
I just looked at the bank rate, 30-year mortgage rate.
Is it time to refi?
Right? The thing is, as you see a drop in these 10-year yields, it comes down as well. So even though the Fed hasn't cut, rates are falling and mortgages are getting less expensive. So people are able to, for example, buy homes more cheaply or refinance buildings. At a time when you can get, for example, office space for cheap, it's been tough to finance those purchases, and that's getting less and less expensive. Or if you want to build, for example, a new construction.
Or if you want to buy, right, you can finally maybe afford that monthly mortgage payment. All right, so let's see what our next guest has to say. Howard Fu is with us, Treasurer and CFO at the $7.7 billion market cap company, Procore Technologies. They are a developer of cloud-based construction management software, joining us from Dublin, California. Howard, good to have you here with Matt and myself. How are you?
Good. Thanks for having me. Good to be here.
Well, good
Wait,
to
Dublin, California?
Did I just say Dublin?
Dublin, California?
Yes.
I had to
Dublin,
ask Matt, is that
California.
really a place?
It is.
We got to start with today's market environment. A lot of concerns about what the sell-off means on the equity side of things. Concerns about economic momentum slowing, the Fed being behind the curve, that the Fed needs to do an emergency rate cut. A lot of our guests saying, kind of slow down, everybody. This isn't the great financial crisis. Having said that, what are you seeing? Are you seeing a slowdown in your business? Are you seeing any signs of recession?
You know, in our business, we're still focused on the tremendous amount of opportunity over the long term in construction. I think when you look at the digitization of the construction industry, which is what we are trying to do for the industry, there's still a tremendous amount of runway there. And when we speak to our customers, while the short-term impacts here with interest rates and what's going on in the markets today do come up in the minds of ourselves and our customers, the sentiment of our customers is tremendously positive over the long term, regardless of what's happening in the short term. So here at Procore, what we continue to do is to continue to not think about just the short term here, but what we can do for the industry and our customers and our shareholders over the long term.
Does the rates picture, though, actually matter to you? I mean, I was talking to Carol about the drop in rates because I knew you were coming on, right? But does it make a difference? Like if the Fed were to cut, we were talking to Connor Sen earlier, who said he thinks the Fed should front load its cuts and go down a full percentage point by the end of the year. Is that welcome news to you?
Yeah, sure. It would be welcome news for us and a lot of other folks across in all the different markets and all the different industries. One thing to recognize specifically in construction, a lot of construction is actually not financed via debt. And so while it would be helpful, there is a swath of construction that is not financed via debt. However, remember, one of the things I talked about is the sentiment of the industry and how that actually drives what the buying patterns are in terms of our customers and their buying patterns for things like software like Procore. If interest rates do come down, that actually does impact the sentiment of our customers, which ultimately translates to how they think about their buying patterns and what they're willing to commit to over the short, medium, and long term. But specifically in terms of how they drop in interest rates would impact the industry itself, that takes some time to go through and flow through to the industry and ultimately to the purchasing decisions for something like Procore. But the sentiment is the main thing that would be a positive for the industry.
Just to quickly clarify, you offer, I imagine, software as a service, so you get continuing revenue from that. And is it non-residential construction that's your main customer base?
Yeah, when you look at the broader construction industry, roughly about a little bit around 50% is residential and 50% is non-residential. We play primarily in the non-residential space and some in the residential space in terms of multifamily homes. And then in that non-residential space, it's highly fragmented and highly segmented and fragmented, where not much over 5% does one part of that segmentation make up in the non-residential space. But yes, we are mostly focused on the non-residential space.
Where's the growth? Is it data centers? Is it logistics? Where is it?
You know, the good thing about the construction industry, because it's so segmented and fragmented, is that there's always going to be pockets where there's good growth, as you mentioned, in data centers, and where there's parts of the industry that are maybe a little bit on the downturn, for example, office buildings and so forth. We do see growth in data centers, but Procore has been supporting data center growth for some time now. The one thing to keep in mind why I bring up why the segmentation and the fragmentation is important is when you look at data centers, it's probably somewhere around 1% to 2% of that non-residential space in terms of construction. But that is an area that we are continuing to see growth.
Bloomberg says, you know, Autodesk is your biggest competitor, and that company has got a lead in building design software, but also has an aggressive acquisition strategy. You have a bigger market share, I think. You're the market leader there, and BI says that's because of your focus on, the market and the end users. And I'm asking myself, why don't you have an aggressive acquisition strategy too? Is that not an option?
Yeah, it's certainly an option, but let me back up just a little bit. I want to make sure folks understand, coming back to my point that I raised at the beginning of this conversation, which is that construction is one of the least digitized industry out there. I think it's the second least digitized industry out there.
Right.
And the reason I bring that up is the main competition is still literally pen and paper or whiteboards. If you walk into any job site, it's literally still whiteboards with colored tape on it, on a whiteboard, figuring out who's going to be on site and for what time and what period of time and how many. And so the main competition right now is still pen and paper. In terms of the acquisition strategy, we obviously look at acquisitions as part of a lever that we can pull. We look at largely organic growth that we primarily focus on, and we also look at whether or not we can insert partner strategies into our overall long-term growth as well. Right now, what we've been able to do is to develop our products and make progress against our product roadmaps organically. And we've largely done a lot of tuck-in acquisitions that really helps us accelerate our path on our product roadmap. So, for example, recently did an acquisition of a company called Unearth, which allows us essentially to put Procore and construction projects on a map, as an example. We also recently did a tuck-in acquisition called IntelliWave that allows us to make progress in terms of building out our product portfolio and our product roadmap with respect to things like labor and equipment management and so forth. So that's the main way that we think about acquisitions. It's certainly not off the table when we have teams looking at and making sure we have a pulse on the industry in addition to connecting with our customers to see what they would like us to move into.
Howard, before you go, we've just got about 35 seconds here. Connecting, you talk about with your clients. What about connecting with investors? Your stock's down about 22% year to date. This is after reporting earnings last week. You were above estimates, top and bottom line. You revised your fiscal year 2024 sales higher. Stock took a beating, down 15% on the news. Forgive me, just about 30 seconds.
No, of course. So one of the main things that we disclosed was an acceleration of a go-to-market change to a general manager model and additional hiring for more technical roles that we think will get us to better scale and grow over the long term to a multi-billion-dollar company.
So hiring.
It allows us to get closer to our customers. It allows us to get better retention metrics. And we think this is a great thing to do over the long term.
Hey, listen, great to check in with you on a day where it's great to check in with the C-suite.
Cool company.
Yeah, thank you.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell. Steep losses for the U.S. equity market. Let's head right over to the first word breaking news desk for today's afternoon call. And here she is, Felice Morantz.
Good afternoon, Charlie. The market rout eased up somewhat during the day, but stocks remained under pressure. Tech mega caps were hit hard with Nvidia, Apple, and Google tumbling. The Dow Jones fell around 2.7%, S&P 500, down by around 3.1%, NASDAQ 100, off by about 3.5%, and the U.S. 10-year yield was around 3.8%. The small cap Russell 2000, down about 3.6%. All of the 11 main S&P 500 sectors are trading lower, led by losses in tech, consumer discretionary communications, and financials. Energy and industrials down the least, both down about 2%. NASDAQ biotechs down about 2.8%. Semis dropped as much as 6.9% before recovering to down about 2.2% now. The VIX at one point registered its biggest spike in data going back to 1990. Leaders in the S&P 500, Intel, Nvidia, Walgreens, and Etsy were among the worst performers. Kellanova jumped on deal news, while Tyson Foods rose after better than expected earnings. Nvidia sank as much as 15% on a report that upcoming AI chips will be delayed due to design flaws, and Apple fell as much as 11% after news Warren Buffett slashed his stake in the firm. In other news, ISM data showed the key U.S. services sector expanded in July, and the Fed's Austin Goolsbee reassured. And in deal news, those Kellanova shares soared as much as 20% as Mars was said to be considering buying the snack maker in what could be one of the biggest deals this year. Wrapping things up, JP Morgan's trading desk said the rotation out of the technology sector might be mostly done, and the market was getting close to a tactical opportunity to buy the dip. Live from the First Word breaking news desk, I'm Felice Morantz. Charlie?
Okay, we thank you very much, Felice. And to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, don't go into the story, but isn't it kind of funny that on a day where the Bears are kind of in charge, that there's a bear story that is among the most read on the Bloomberg? Don't go into it yet.
I'm just going to say that it's my favorite story today, and that's been the case since I woke up this morning. So nothing has been better than the bear story.
There's like selling on the market. Matt's like, Master, have you seen, Carol, have you seen this story? We'll get into it later. First up, though, we are about 17 minutes away from the closing bell on this Monday. Let's get to it. Our Drive to the Close guest, Penny Pennington. She's CEO at Edward Jones, joining us from St. Louis. Penny, nice to have you back with us. How are you?
I'm great, Carol. Good to be with you and Matt. Hope y'all are well. What a day.
Oh, my goodness. It has been a day.
But we feel like we keep saying, listen, it's not the great financial crisis. We've seen market sell-offs. It feels kind of orderly.
Now. It does now, right? How do you feel, Penny? Because last night when I saw the Nikkei open up and immediately drop 12%, I was like, holy camole. It felt bad. And to be honest, this morning...
Did you really say holy camole?
I said something like that. And then this morning, when we opened up down 4%, down 5%, it felt rough.
Well, let's pretend we're all sitting in the movie theater together watching the economy and the market unfold. Our view is that we have not had a plot twist. This economy and this market is continuing to resolve toward a slightly softer economy, but also lower inflation, lower interest rates, productivity gains that we still expect as a result of technology and AI. We really think that nothing that dramatic has changed because of the read that we got on Friday. Now, remember, going back just a month, we got a lower than expected read on inflation, which was good news. And so we really think that this is not a plot twist. We're continuing to advise our clients to stay focused on their goals and the long term, and this will play out over the next few weeks.
So how do you make the distinction between bad news being good news for the equity markets and bad news being bad news for the equity markets?
Well, I think the real distinction that matters is around uncertainty. And so any form of news can be listed as adding to certainty or elevating uncertainty. And we're in a volatile period right now. The market is seeking out certainty for interest rates, certainty for inflation, certainty for the prediction for what's going on with the economy. What we seek to make more certain for our clients is their long-term goals. That's the job that we do. And in moments like this, I was thinking about that this morning, Carol. Under normal course of business, our financial advisors would have 100,000 scheduled engagements with our clients today. Now, that may have increased just a little bit as people are talking to our financial advisors.
I was curious if your phones were ringing off the hooks this morning.
Well,
were they or not?
They really weren't. If we've done our job well, then the job to do in a moment like this is to listen carefully to the concerns that our clients are bringing to us, put it in perspective for them, get them focused back on the long-term orientation to their goals, certainly do some scenario planning. We're not going to put our head in the sand. We're going to do a little scenario planning and say, okay, what happens if this kind of volatility were to carry on for just a little bit longer? And then finally, and really importantly, where are the opportunities? Volatility like this presents opportunities to make sure that your portfolio is well balanced, but also if it got out of balance a little bit, to get it back in balance during a moment that really makes a lot of sense.
Like Warren Buffett and Berkshire and Apple.
Is he a client? Are they a client of Edward Jones?
All across North America.
I was talking this morning to the incoming CEO at Vanguard, and they see a little bit of a shift in the way their business is done just because of the amount of wealth that the boomers have gathered up. I think Ed Yardeni said he thinks it's about $75 trillion. And Sally Krawcheck pointed out that's going to be passed on now to the next generation. The majority of the people, by the way, who are going to accrue that wealth, women. Right? It's going to be a real shift in terms of what she calls the feminization of wealth. But what does that mean for a business like Edward Jones? I mean, you have been in business for over 100 years.
We have 102 years and are working today with 5 generations of investors at one time. And so we're listening to each of those families. What is the legacy that they want to pass on? Their wealth legacy, but also their values legacy to the next 2 generations of their family members. We want to be the biographer of those stories to ensure that as much as their wealth transitions, their legacy and values transition. One thing that I would add to this conversation, and I'm glad that we're having it about this kind of transition, is the story around business owners in America. We have 33 million business owners in America. And when you think about the engine of our economy that is, the same thing is about to happen. Business owners are thinking about the succession of their businesses. Our research shows us that about 1/3 of business owners don't intend to have this succession conversation until just 1 or 2 years before they expect to want to transition the business. We don't think that that's enough time. And so a good financial advisory relationship, especially one that perhaps is with a financial advisor who has special designations associated with business owner transition. This is a really important thing for your family, for your business, for your employees, and for our economy.
Hey, Penny, I got to ask you, and got to be quick, 10 seconds. Are people calling you, though, saying, NVIDIA, it's on sale, this stock's on sale, I want to buy, real quickly? Are you getting those calls today?
Absolutely. That might be the way the conversation starts. And then the next part of the conversation is why?
Got it.
And how does this fit into your overall goals?
Penny, thank you so much. Really appreciate it. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. A key victory for the Justice Department today. A federal judge in Washington has ruled Google's payments to make its search engine the default on smartphone web browsers violates antitrust law. Alphabet shares lower today, part of a broader tech sell-off. Alphabet down by 4.8%. Given the selling in tech names today, does it represent a buying opportunity for technology names like NVIDIA? David Katz is the president and chief investment officer at Matrix Asset Advisors.
We would still not buy companies that are above 40 and 50 times earnings. So we think you're probably a little bit early on NVIDIA. We worry about that. But other places you definitely can buy. The banks are getting really beaten up here. Fundamentals are good. Banks benefit by the Fed starting to lower rates. So we think that you can start to buy banks into this sell-off.
David Katz, president and chief investment officer at Matrix Asset Advisors. Dell Technologies cutting jobs as part of a reorganization of its sales teams that includes a new group that is focused on artificial intelligence products and services. Oil is extending losses to a new 7-month low as a sell-off in wider financial markets continues to heap pressure on prices. West Texas Intermediate crude oil now higher, reversing earlier losses, up by about 0.4%. 73.78 a barrel. Among oil names today, we've got ExxonMobil down 2%, Chevron down 2.9%, ADRs of BP lower by 3.1%. The Italian restaurant chain Buca di Beppo has filed for bankruptcy with plans to reorganize by canceling leases on at least a dozen locations that the company has closed. The company blames its troubles on lower sales. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just about 4.5 minutes to go until we get to the closing bell. We're going to head over to our TV colleagues, Matt and myself, and count you down to the close. A little bit of earnings, too. Having said that, I'm so afraid to open this door, but, you know, I like living on the edge a little bit, especially when Matt Miller's in the house. And because we're Bloomberg, and I love most read, it's one of my favorite things on the Bloomberg. Among the most read stories on the Bloomberg is about that dead bear cub story in RFK.
I haven't read Bloomberg's story of it.
I don't know that
but
I
I
have
watched,
the Journal story. I have the Times story.
Okay,
I don't know that
I watched the actual video. So Robert Kennedy Jr.
How many times did you watch the actual
like 3
video?
times now.
Figured.
He's running for president, obviously.
Yes.
But not many people have been talking about him lately because we're all focused on Kamala and whatever Trump has done. So I don't know if this is to bring himself back into the news, but he posted a video of him hanging out at Roseanne Barr's house, or at least with Roseanne Barr. She looks great, by the way. And he's telling a story about driving around upstate. He's going hawking, like taking hawks and hunting with them, which is awesome. And he sees a car in front of him.
Could you go hawking?
I would definitely do it. I haven't done it yet. Anyway, he's driving, I'm guessing, on the Taconic, right? Yeah. And he sees a car hit a bear and kills this bear. But the carcass is in fairly good condition, and you can, in New York, grab roadkill and get yourself a tag from the conservation department.
He wanted to skin it, and he also
wanted to skin
keep
it.
the meat in
He
his
wanted
fridge.
to keep the meat,
Yeah.
and it makes a lot of sense to me because I know people, especially Kennedy type people up in the Northeast, do that. But he needed to go to a dinner at Peter Luger's, so he had to come back to the city, and
Great
it took
place
too
for a
long.
steak, not
then
bear
he had
meat,
to go
not bear meat, but a steak.
Right. Then he had to go to the airport, and long story short, he didn't have time to get back home to put the bear in the freezer. And I guess he was sitting around with a bunch of people who were drinking, and they thought it would be hilarious if he would just drop the bear carcass in Central Park. He also happened to have a bike that he needed to throw away, so he put the bike there as well to make it look like the bear had been hit by the bicycle and killed in Central Park. And then he just pieced out.
We thought it would look amusing for whoever found it.
Well, it was amusing. And no one knew where this bear had come from. It was a huge story 10 years ago, and now, a decade later, we find out it was RFK Jr.
It's an interesting political campaign year, isn't it, or a political election year?
It is weird.
Okay.
That's for sure.
Speaking of weird, we got to get back to the markets. Over to our TV colleagues. The closing bell starts now.
The closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day on this Monday. Scarlett Fu and Alex Steele here to take you through the closing bell. We've got a global simulcast. Let's welcome Carol Massar and Matt Miller. And in doing so, welcome to our Bloomberg Television, radio, and YouTube audiences worldwide. Manic Monday. We're going with the alliteration theme today.
I like it.
But it feels like it could have been a lot worse, and we've been spared the worst, given that ISM report at 10 a.m.
I got to say, Matt and I have been having a lot of conversations, like for all of us, right, who have lived and reported during the great financial crisis, during COVID, the meltdown, and the shutting of the economy. This, even though it felt maybe a little uncomfortable at the get-go, at the beginning, I feel like it's been a lot more orderly. And we've even seen that we're off our worst levels of the day, Matt.
Yeah, absolutely. I mean, overnight, when I saw the Nikkei open down more than 10%, I started to get really worried. And this morning was rough because futures were worse than they were on Friday. And then we opened down more than 4% on the S&P, down more than 5% on the NASDAQ. But you're right, Scarlett. When we got that ISM number, it kind of equalized things and we felt a little bit better. Even though the numbers are still bad, they're not nearly as bad as they were.
Yes, but, or yes, and, I think I have to say, yes, and. I've been harping on this all day, the systemic funds, right? Like if you have a volatility shock and a VAR shock, eventually they're gonna have to keep selling. And so I'm really skeptical that the selling is actually done yet.
And that momentum takes on momentum of its own. So it may just be a pause before the next wave of selling comes along. But for now, we can call it a day here for Monday.
Yep, we got the bells. There you have it. Volume is really high here. We're just settling out, but the S&P looks to be closing down around 3%. The NASDAQ off by about 3.4%. The Dow Jones Industrial Average off by about 2.6%. Again, volume pretty strong on this Monday, Carol.
All right, and looking at the S&P 500, folks, we've talked about it, right? Pretty broad-based selling, 482 names in the S&P 500. Lower today, Scarlett, 21 to the upside.
Yeah, let's take a look at the IMAP, which should be pretty red across the board here, because if you slice the S&P 500 into 11 sector groups or 24 sector groups, everything is down. In fact, by 24 groups, yeah, the best performing group is household and personal products, down 1.4%. So yeah, all red, only a tomato pie there today.
I love that. All right, so it made it really tough to find some gainers, but I did find a few. Killanova up about 16%, just off its highs of the day. Top #1 gainer in the S&P 500, up the most since October of '87. This, as Mars considers buying the snack maker and what could be one of the biggest deals this year. Deal talks are said to be ongoing. No final decisions have been made, according to those familiar. A deal could value Killanova at around $30 billion. That's coming from the Wall Street Journal a little bit earlier today. On semiconductor, again, another one, an outperformer, up almost 6% at its highs today, finishing the day up 1.5%. This was among the top gainers in both the S&P 500 and the NASDAQ 100. I don't know why, to be quite honest. There was some news Friday after the close of market selling, or insider selling, which would make me think it would be down, but it's not. We did see the stocks briefly turn positive in today's session, so it could be that there was just some momentum, some buying, and pushing some of these names higher. And Advanced Micro also higher, another of the semi names, up about almost 2% in today's trade, Alex.
Yeah, we still have some earnings that are coming out. I mentioned CSX. The earnings came in right in line, a little bit better actually, at 49 cents a share. The estimates were for 48. Revenue bang in line with estimates, 3.7 billion. I was just kind of strolling through the press release here in terms of the performance to see kind of what was growing, where the risks were. It doesn't seem to have that kind of color yet, but we'll definitely keep looking on that in terms of their outlook. I know that their operating income looked to decrease about 1% versus the same period last year, but nonetheless, so relatively solid results from CSX.
Okay, we also have earnings out of Avis, and of course, the car rental company. This is a stock that's really declined a lot this year, down about 52%. Second quarter revenue missing the average analyst estimate, $3.05 billion. Analysts were looking for $3.14 billion. International revenue also lighter than anticipated. America's revenue lighter than anticipated. There's a theme here, obviously. And adjusted EBITDA down 71% year over year, $214 million. Analysts were looking for $254.7 million.
All right, we're caught up on Avis earnings now. Take a look at some of the losers in today's market. Much bigger company, NVIDIA, was at one point down like 15% and had lost almost $400 billion of market cap. So this 6% loss doesn't look as bad as it could have been. Nonetheless, obviously, it is at least one of the two world's biggest companies, so a huge drag on the S&P. Apple as well. The Apple story, I think, is fascinating. Warren Buffett has sold, we found out this weekend, entirely half of his Apple shares. He still has a massive position. In Apple, like 400 million shares, but and Apple had rallied up into the end of the week, but that story hurt Apple shares considerably today. Again, not as bad as they were this morning, but we're still closing down significantly on what is a very large company. And then I had a look at, Robinhood and Bitcoin and Coinbase were all down because of the underlying asset. I'm guessing you can trade Bitcoin and Robinhood. It hurt that platform. You obviously trade Bitcoin on Coinbase, and it hurt that platform, bigger stock as well. But in general, Bitcoin has been a risk indicator. So with this huge risk-off feeling pervasive in the market, Bitcoin at one point was down like 16%. I think it's down right now about 9 or 10%.
9%, yeah.
And that is hurting anyone who's related to it. MicroStrategy also a big loser in the market today.
All right, I'm taking a look at the bond market. It looks super boring right this second, but man, was that a day for a bond trader.
What a turnaround.
So, I mean, really, at one point, you had the 2-year yield down 20 basis points, and now it's up by 1 basis point. At one point, you had the curve disinverting and holding around 2 basis points, and then all of a sudden, now we keep inverting. I mean, that is a tremendous move in the bond market. We get supply later on this week for sure, but nonetheless, I mean, I don't know what to make of that price action.
10 a.m. ISM services coming in better than expected. Everything is above 50, which signals growth. Not tremendous growth, but above 50 does signal that things are not contracting, and that's the biggest part of the U.S. economy.
Which kind of feels like the environment we're going to be for, the next month or so, until we get through Jackson Hole, until we get to the next Fed meeting. Jay Powell reminded us, there's a lot of data points to get through, so you do wonder about how that kind of shapes the trade and whether or not we continue to see more momentum, at least on the yield curve, to the downside.
All right, let's get some numbers here on Palantir, because that is also coming out with earnings. So just the big headline here, on a full year adjusted operating income basis, they're looking at anywhere between $966 million to $974 million. They were at some point looking for about $882.9 million. So they're raising their full year adjusted operating income. Remember, this company has kind of two businesses, really. It's a government revenue-based contracts, and also they're trying to ramp up their commercial business as well with their artificial intelligence platform. So this feels like, okay, AI, I can make money from it.
Well, plus, if they get J.D. Vance into the White House, what an amazing coup this would be for Peter Thiel. I mean, the stock's already up 40%, but imagine the government contracts they could be awarded after that.
Yeah, well, the company was co-founded by Peter Thiel in 2003, and this is definitely part of the appeal of a company like this, all the recurring revenue that it gets from the U.S. government. One thing we should note is that Palantir says AI has transformed its business. Already transformed is the direct quote here. And of course, what people want to get is the color here on exactly how much of a contribution AI has made to the business.
All right, we're looking at Lucid earnings as well. And if you're sitting at home trading this company, let me give you the headlines. The EBITDA loss, or the loss before taxes, interest, and depreciation, was $647.6 million. We were looking for $560.9 million, so worse than expected. However, the revenue in the second quarter was $200.6 million, and we were looking for revenue of $185.8 million. So the revenue was better than expected. Of course, it's really all about liquidity with this company. Does it have enough cash to stay in business? And so far, it looks like they do, because the Public Investment Fund is making a new $1.5 billion commitment for Lucid. That has got to be good news, I would guess, for the shares.
They poured a lot of money into
about 6%.
Yeah,
up about
they've
6%.
already put $3 billion into it.
All right, Hims & Hers also out. Hims & Hers Health out. Stock is a little bit lower here in the aftermarket. I'm going to go right to the outlook. Third quarter adjusted EBITDA of 35 to 40 million. The estimate on the street is 33.8, so it does look like that's a beat. Fiscal year adjusted EBITDA of 140 to 155 million. That is an up forecast. It had seen 120 to 135 million, but the stock, which has been a real outperformer, up 100% so far this year in 2024, kind of kicking around right now. up about 0.8%. All right, guys. Whew. Monday. That's a wrap.
That was a day. That was a day.
That was a day. Can't wait to see what Tuesday brings. That's a wrap. That's going to do it for our cross-platform coverage of the market close on radio, TV, YouTube, Bloomberg, or Rachel's. We will see you guys again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, wrapping up with our TV colleagues. We're going to continue, though, with some market coverage here, right here on Bloomberg Business Week. Carol Masser along with Matt Miller, in for Tim Stenevec. Our next guest notes, we just passed the first-year anniversary of a Fed on hold. It is kind of good to take a step back and remind us of kind of where we were a year ago, right, when the Fed started. Or it's actually longer than that now, right?
Yeah, the Fed has been on hold for quite a while, and you know, they still are, essentially, although they've told us, basically, that they're going to start cutting in September. There were a lot of cries this morning for an emergency meeting, but it seems like that would have been a horrible idea to spook the investment community.
We've ended, I mean, with losses, but it's not like everything has come
Well,
undone.
and look at the bond market. I mean, to me, that's the most interesting move of the day. We were down, what, 15, 16 basis points on the 2-year, and now we ended the session up in terms of the yield. So
364 low, right, on the 2-year today. And we finished at, what, 388?
There you go. Not bad.
Not bad. Right? Not coming undone completely. All right, let's see what Patrick Fruzetti has to say. He's Managing Director, Portfolio Manager at the Registered Investment Advisor and Wealth Management Company, Rose Advisors. They've got about $1.5 billion in assets under management. He is with us in New York City. Patrick, good to have you here. So what was your day like?
Well, thanks, Carol. Thanks, Matt, for having me. Yeah, I would say it was an interesting day. It's been an interesting week that we really, the past, 4 or 5 trading days, ever since Japan, the BOJ decided to hike interest rates unexpectedly last week, you saw an unwind of the carry trade. And this really feels, what did today feel like? It kind of felt like a margin call a little bit, It's to start the day. It was really, it felt like a pretty bad capitulation. And like you just pointed to, you look at rates, look where it ended up. And rates can tell you a lot. And I think while last week, if you look at last week, the expectation for this time last week, a 50 bip cut was like 11%. And now it's like 83% that the Fed will cut 50 bips in September. So we'll see where that ends up. Right now, again, with all the news, the carry trade unwind, the job number on Friday, Buffett selling half his Apple stock, it tends to happen like that, and you see these kind of moves. From my standpoint, this was, it's been a while since we had one of these days, and so to have it, frankly, for me, is somewhat refreshing. I've been speaking about rebalancing, throughout the whole first half of the year. I thought investors should have taken the chance with some market strength to rebalance. And so today's no different. And if there's some more opportunities in the coming week or weeks, great.
So, I mean, in terms of the losses, right, if you're looking for the bottom of this, let's call it a correction for now, because it was near as damn it on the S&P and definitely on the NASDAQ. Do we still have a few down days because unwinding the carry trade, as you mentioned, margin calls, these things take a few business days to get done, at least. So do we see this ripple into losses for equities over the next couple of sessions?
I wouldn't be surprised if it does, quite honestly. And so, it really started late last week, like I said. So maybe we get a couple more days out of it. But I don't know if we're going to get that snapback rally either. And part of the reason where you led this off around, being, it's been over a year since the Fed's been sort of, quote, on hold. And that period historically has always been very good before the first rate cut after a hike cycle, right? And so when I look at this period being, pretty good period for markets, albeit with a higher cost of capital, once the Fed decides to cut and when they actually do cut, I think we could see a period, and we have historically, where it's been about 6 or 7 months before the market bottoms. And so we're going to go, I think we could go through this period of just sort of ups and downs over the next 6, 7 months if the Fed does actually cut next month, and I think they will. And then, also it's always typically followed by, a little bit of a decline in S&P earnings. I typically see roughly a 10% decline in earnings 12 months after the first rate cut. So we'll see what happens. I like markets like this. It's fun to be a fundamental investor and just really get to the bottom of it, especially after we've been in this sort of momentum-driven, AI narrative rally for so long. So it's more refreshing.
By the way, Patrick, you mentioned the kind of investor that you are. Did you have to unwind any carry trades? Were you taking advantage of that pile of free money for the last 10 years?
So I didn't take advantage of the carry trade. I can say yes, maybe taking advantage of low interest rates during the past 10 years, but not via carry trade. No, I did not participate in that.
So you say fundamentally it makes sense to kind of focus on fundamentals in investing right now. So where does that lead you to in this environment?
Yeah, cash flowing companies, good balance sheets, and the ability to raise prices, because the Fed is now dealing, as they have a dual mandate. They've had no issue with employment for the last couple of years, actually. And so it's been a very tight labor market post-COVID. But they have had to worry about inflation. Now they have to worry about employment. Employment's going to become front and center, especially with a weaker job number on Friday. So I think, the potential of them cutting while they still haven't hit a 2% inflation target, I think could be very telling. And that just means own companies that have a lot of pricing power and can raise revenues and offer essential services and products. And those are the kind of businesses I like to own. And I also like to have some exposure to commodities. It's been a rough couple of weeks.
Which commodities?
So it's been a rough. So I'll talk about. It's been a rough couple of weeks for things like crude oil. I still like exposure to gas and oil. I like exposure to things like uranium. It was a great trade until the last couple of weeks. Those types of commodities, but I also like precious metals. Precious metals is probably my biggest commodity holding, and that's really helped balance out the portfolio over the past 12 months.
What about owning Japanese equities has been a popular trade for hedge funds over the last few weeks and months. Does that change now with the massive move in the yen? I mean, the strengthening there makes it harder for those companies, I guess, to export products. But is it still a good place, you think, to invest?
I think it could be. I'm not really long Japan right now, but I would say the companies from an earnings perspective actually do look, somewhat attractive. But with a weaker yen, when you factor in the weaker yen, it hasn't been a great trade for a U.S. dollar investor. Over the past call it 8-9 months. But let's be honest with this correction. Maybe it does create an opportunity.
Yeah, I was just trying to gauge, Patrick, what you think of equities outside of the U.S. Because for so long, the U.S. has been the only game in town. And even when people would kind of stick their necks out and say, oh, I like Europe now, it turned out to be the wrong call and has been that way for, a decade or two. Is America still where you're mainly investing?
Yeah, America, North America, companies that are exposed to North America, the onshoring, reshoring trade. But you could also look, again, I don't have direct exposure here, but I do to some respect, these countries that have kept, reasonable, balance sheets throughout the pandemic, Mexico, again, part of North America, Brazil, even to some degree. I think you could look at some of those countries for some potential exposure. But overall, I'm a U.S.-based investor. I try to get exposure through owning different multinationals. That's a way to potentially get some exposure to other countries.
Hey, Patrick, 30 seconds left here. I mean, are you turning your back on big tech? I mean, NVIDIA, 6% on sale. Amazon's down 4% today. So is Alphabet down 4% on sale. Are you turning your back on that space?
Well, I think some of those companies have a long way to go. I mean, semiconductors are down over 20%, I think close to 25% since their peak in July 10th.
Yep.
I thought they were expensive, then. I thought they were expensive months before that. So I think those have some room to go. There's definitely some companies that I think could be reasonable if they continue to sell off here. Yeah, I have a watch list. Again, the chip stocks, I've ruled out for now. They're not even close in my view.
Well, great to check in with you. Patrick Frusetti over at Rose Advisors. This is Bloomberg.
It's 421 on Wall Street. You check markets all day long here at Bloomberg. Developing story after ours. Lucid Group will be getting a cash infusion of as much as $1.5 billion from one of its biggest investors, an affiliate of Saudi Arabia's Public Investment Fund. It is the second time this year the EV maker has received much needed funding. After ours, we got shares of Lucid up by 9%. Among the names reporting earnings after the close of trading, Palantir Technologies, it topped second quarter estimates for revenue and earnings. It also raised its annual outlook. After ours, Palantir up by 16%. Stocks lower across the board, putting it mildly today. Steep losses, S&P down 160, ending the day at 5186, a drop of 3%. Dow Industrials down 1,033, a decline of 2.6%. NASDAQ down 576, a decline of 3.4%. 10 10-year 3.78%, the 2-year 3.89%, gold down 1.5%, 24.06 the ounce. West Texas Intermediate crude up 0.4%, 73.79 a barrel. Bitcoin down 8.9%, 53,861 on Bitcoin. Again, recapping the 10-year 3.78%, the 2-year 3.89%, and a 3% loss today. Tech sold off 3% loss for the S&P 500 index. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you've been talking a lot about crypto today, right? We saw definitely.
Yeah, a little, because, I always look at what's going on with Bitcoin. It's been such an interesting risk
Paul
indicator.
Sweeney always says.
I know, that's the thing. Listen,
cryptocurrencies and Bitcoin in the morning just for you.
That's the thing that Paul and Tom do in the morning, which, I'm a little bit flattered because they think of me, but it's not like I own a lot of Bitcoin.
Do you own some?
I have a very small amount of Bitcoin that I have not been able to access since 2013. Because I lost my password.
Context means everything,
I just can't get hold of it, so.
You've lost it.
I lost it.
That's so sad. All right. Well, investors did dump shares of Bitcoin and Ether, exchange-traded funds in droves as the world's two largest cryptocurrencies. At one point, we saw Bitcoin down more than 16%, and second-ranked Ether had its steepest fall since, I think, 2021. So not pretty at all today. So let's get to it. We want to talk a little bit about...
But it's still unbelievably high.
For the year.
No, just in general, this digital code, this little piece of ones and zeros is worth $50,000. It's insane.
I don't understand.
When I first started covering Bitcoin, the idea was, how could it be worth $1,000? There's no way people would pay $1,000 for Bitcoin.
What is it worth?
And then because of that, I did 2 weeks of living only on Bitcoin. I didn't spend dollars. You remember?
I do remember that.
And
I keep thinking you bought a Christmas tree, but I don't think you did.
No, I bought Christmas presents.
Oh, that's what you did.
I bought video games at GameStop. I figured out a way to buy gas and beer and stuff, and it was fun, but I couldn't believe it was worth $1,000. And now, I just don't get critics of Bitcoin who have been critics of it, who have thought it's absolutely silly and ridiculous for the last decade and a half.
Now own it.
They have to eat their hats at some point. It's
right.
worth $54,000.
Can we bring in James Seifert?
Yeah.
All right. He's Bloomberg Intelligence Strategy and ETF research analyst. James, help me. Joining us right now. So tell us a little bit about the crypto trade. Definitely this risk aversion day felt big time in the crypto space.
Yeah, what happened over the weekend and what was starting to happen last week. Even before this weekend, ironically, Bitcoin was trading up when equities were trading down. There was this kind of divergence for a while. You saw Bitcoin trading in line with whatever the Qs and the NASDAQ, the tech stocks were doing. There was a bit of a divergence. And then this weekend, the correlations kind of went to one. And I think part of that has to do with if you need to meet a margin call, you need cash, you need liquidity, you're going to trade whatever you can trade. And Bitcoin is one of those things, Ethereum included, that trades 24/7, and you can get access to cash if you really need to. There's a few other things in there that coincided with the sell-off, what we're seeing in Bitcoin and Ethereum. That is specific to the crypto industry. Namely, Genesis Trading is moving billions of dollars of Bitcoin, almost $1 billion of Ethereum. We have Jump Trading, which is one of the biggest traders in the space, completely liquidating their entire portfolio of Ethereum over the weekend in thin markets, which tells me they were kind of forced sellers. Maybe they had the margin call thing, but yeah, this has been absolutely brutal.
Hang on, what's Genesis moving all that money around for? Isn't that Barry Silbert's shop, and don't they owe the Winklevi a lot of money?
Yes, exactly. So I think it was about $2.1 billion in Bitcoin, something like $700 million of Ethereum. I don't think it was sold necessarily, but it was moved to a bunch of different wallets. That's likely going to be distributions from their bankruptcy, right? So they're paying out a lot of their distributions in kind. So who knows what's going to happen once that moves to those people, if it already has. Some of it is likely to be sold. How much will be sold? There's no way to know. But that probably also played a role here. That news really dropped we saw things moving in wallets on Friday night. So that definitely contributed to
that has always been, to me, one of the most fascinating aspects of this asset is that you can see and track its movement from everyone can see. It's so transparent in terms of where it is on the blockchain. But can you also see, James, in what country people are buying and selling Bitcoin? Because Carol was talking earlier about the fact that it could be considered a safe haven asset, and that idea sounds ridiculous to us here in America because we have dollars, right? But it's not as ridiculous if you live in a country that's experiencing hyperinflation, for example. So if you're in Venezuela and you're looking for a way to get the heck out of that country because, you know, maybe some dictator just faked an election and he's after you for protesting, like, it makes sense to shift into Bitcoin. Can you track kind of the regional flows?
So not really. I mean, there are platforms out there that try to do it. We can't do it on the terminal. But you can look at different platforms. So there are certain exchanges that are more popular internationally. If you look at Coinbase, it's pretty much heavily used by U.S. investors. So you can kind of see it. But I do agree with you. I think if you're in one of those regions where your country is being hyperinflated or severely inflated, maybe not necessarily up to the level of hyperinflation, the promise of Bitcoin is more exciting to you. But if you just put your money into Bitcoin last week and now it's down 15%, that's not exactly the greatest narrative here. The flip side of that, I would say, is like, this is kind of like everyone thinks of gold as the real like store of value, right? This Bitcoin right now is kind of like gold in its teenage years. So it remains to be seen if it will actually become a true store of value in different regions around the world. But right now, who knows how it's going to play out? But I think it's possible that it could. But it's going to be a long time before we know whether it will or not. So right now, a lot of the traditional markets, based on all the selling we saw of Bitcoin specifically this weekend, obviously there's plenty of people that don't think about it as a safe haven asset or a store of value. But it definitely was when things go bad, correlations tend to go to 1, and that's what happened with these assets and basically any risk asset more broadly across the world over this weekend and today.
It was worth $71,000 in June. And I mean, it is ridiculous to think of it as a safe haven asset for anybody in the Western world. But you know,
what?
I guess we have it easy, and you know, some people have it hard, and they need to deal in assets like this. I think it's probably a very, very small piece of the trading universe. So,
what? Are you trying to sell me on this?
No, I'm not. I'm saying, like, that's not part of the story. I'm guessing most of the buying and selling is happening in places like New York, right? Or in China, or
Japan.
Not in Venezuela, is my point.
Yeah.
Yeah.
I mean, I would say one of the key things that we have, like one of the big critiques of the space is where's the product market fit? It goes to what you're talking about here right now, Matt. It's the product market fit we do have is in stable coins, US dollar backed things on the blockchain. That is one area that has undoubtedly found a product market fit. It's almost become like a euro dollar market around the world.
Interesting.
Whether or not Bitcoin, the whole world will view as a store of value asset, a safe haven asset at some point in the future, who knows? But I think stable coins are going to be here to stay.
It's hard for me to think of crypto in its teenage or gold in its teenage years. I have a really hard time getting my head around that.
Yeah, because that would be what, like 5,000 years ago?
Yeah,
I mean,
like,
when was gold in its teenage? When was gold in its 14th year?
Is this when we're all living on Mars? Like, you know, it's going to be gold. Listen, good to check in with you because a really important part, certainly, of the trade today. James Seifert, he's Bloomberg Intelligence Strategy and ETF Research Analyst, talking about the crypto trade today. Hey, one thing we do want to get to is we did have a headline cross around 2:45 p.m. Wall Street time. A federal judge today ruling that Google has illegally monopolized the search market, handling the government an epic win in its first major antitrust case, against a tech giant in more than 2 decades. So we just kind of wanted to make some sense of it. We did see shares of Alphabet dip on the news. Jennifer Rhee is with us, senior antitrust litigation analyst at Bloomberg Intelligence, here in studio. What do we need to know?
Yeah, by the way, was there a question before as to whether or not Google was a monopoly in search? I mean, duh, right?
You know, actually, Google tried to argue that it wasn't, so we all knew they were going to lose that one. You know, here's the thing.
Aren't you using Chrome? Or?
Right.
I am. Google Chrome. Right. Everyone uses Google for search.
That's right. Well, the thing is, it's not illegal to be a monopoly, right? It's not illegal to have a monopoly. You can have a monopoly. That's part of what this is about. But the main thing this was about is its conduct. So if its conduct is unreasonably exclusionary as a monopolist, that can be illegal. And that's what the judge found, because essentially Google pays pretty much everybody, Apple, Mozilla, the wireless providers, the OEMs like Samsung that make the phones, to set Google search as the default search engine, sort of behind those browsers, behind Siri. And what that did is it blocked out all the rivals. And the important thing about blocking out rivals like Bing or DuckDuckGo is that you need scale to be a good search engine. And what that did is it deprived them of the scale to be a good search engine. And and that's part of the harm here.
So what no, go ahead. No,
So that's what the judge decided.
So what happens from here?
So this was what's called a bifurcated trial, right? The judge separated out the concept of liability from remedy. So all they've done is decided and worked on, is Google liable? The judge today said yes. So now they have to start a remedies phase. And I think that's probably going to take some time, 6 months, could even be a year, to decide what do we do now to fix this.
All right.
They offer DuckDuckGo.
No, they've got to, I guess, just pay a big fine and continue to be a monopoly in search, or?
No, I think no fines. I think actually they'll have to stop these payments that they make to Apple, Mozilla, others to be the default search engine.
Do you call those bribes, or is there another word?
Why, the judge might think of them as bribes. Google certainly doesn't. But it's probably going to have to stop those payments, which honestly is going to probably hurt Apple more than it'll hurt Google, because we're talking $20 billion a year.
Wow.
So it's a lot.
They rely on those kickbacks.
Probably do. So, they're going to have to come up with a new plan too.
As consumers, are we going to then have kind of a menu of options to decide who our search?
It's possible, yes.
Okay.
So that's what's happened in Europe. It's called a choice screen. So if somebody buys a new Android phone and they open it up for the first time, they can pick what they want to have as their default search engine.
I feel like I already have that now, but of course I just pick Google like everyone else.
Well, that's what I was going to say. I mean, if it's actually great for consumers in terms of ease or use, like, is that, I don't know.
Well, that's the issue. Apple could have done this before, but the phone providers don't think of this as better for consumers. They said, we just want to give the consumers the best option, which is Google, and we don't want to complicate things. We want them to open a phone and have it work really well.
And just go,
right? And just go. So they don't really want to do this, but the judge could order that, at least for Android phones, because Google owns Android. Can't do any ordering to Apple because they're not a defendant. But for Android phones, there could be a choice screen. They might have to stop those payments to be the default search engine. They may even have to share some of their data.
So Google may not pay these customers and then still get their search engine used more than any others.
Probably.
Yeah. Amazing.
We wish we had more time. Come back soon.
Okay, anytime.
Jen Rhee, she is Senior Antitrust Litigation Analyst at Bloomberg Intelligence, because there's a lot going on, certainly when it comes to big tech in the legal world. Shares of Alphabet finishing the day down 4.6%. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We're keeping an eye on Palantir Technologies after ours. Palantir tops second quarter estimates for revenue and earnings. Also raised its annual outlook, citing continuing demand for its AI software, which it says has already transformed its business. Palantir after ours up by 15.65%. The Dow, the S&P, and NASDAQ all suffered steep losses today, with the S&P down 160 points, down 3%. The Dow was down 1,033, a decline of 2.6%. NASDAQ down 576, a drop of 3.4%. 10-year, 3.77%. The 2-year, 3.89%. Spot gold down 1.4%, $24.09 the ounce. West Texas Intermediate crude up 0.4%, $73.82 for a barrel of WTI. Bitcoin now below 54,000, down 8.9%, suffering a drop of $5,200. Bitcoin now at 53,924. So it was a down day for the Dow, the S&P, and NASDAQ. As for the market decline, Penny Pennington is the CEO at Edward Jones, and she was a guest right here on Bloomberg Business Week.
The real distinction that matters is around uncertainty. And so any form of news can be listed as adding to certainty or elevating uncertainty. And we're in a volatile period right now. The market is seeking out certainty for interest rates, certainty for inflation, certainty for the prediction for what's going on with the economy.
Penny Pennington, CEO at Edward Jones, and certainty for tech names today, selling off NVIDIA. Case in point, down 6.4%. Apple down 4.8%. Microsoft down 3.3%. Tesla today was down 4.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're staying with the markets. We're kind of getting the band back together, as we like to say. A voice that Matt and I have leaned on a lot over the years during moments of stress in various market cycles. He's got a great perspective on the rallies and the sell-offs that make a market cycle. Back with us is Joe Saluzzi, partner, co-head of equity trading at Themis Trading, joining us from New Jersey. How are you?
I'm great, Carol. Good to get the band back together. Like you said, quite the reunion tour after the years.
We've had a lot of fun over the years.
Yeah,
you know, I mean, one of the things that I always love to talk to you about, Joe, is market structure and trying to figure out what exactly is happening. So that's why I thought of you instantly this morning when we saw the Nikkei down, 12% overnight, and it was limit down. A number of time circuit breakers were tripped. And then this morning, futures were hit much harder than the market had been on Friday, and we opened off more than 4% on the S&P, more than 5% on the NASDAQ. And I'm just trying to wrap my head around what happened. Is this from the Bank of Japan? Because that happened on Wednesday, and we didn't have a sell-off then, but we're starting to hear about carry trades being unwound, and it sounds very mechanical. On the other hand, there's a growth scare, right? So what is it?
Yeah.
By the way, I'm looking at the wrong camera. Look, I have two cameras here, and this is not the right one.
Matt, let Joe talk.
Sorry.
Well, you guys have all the reasons. I've been listening to the show during the day. They're all out there. People got a million reasons why. But, I think it's also a liquidity issue, and it's always been a liquidity issue when you get volatility like this. And, bids disappear. We've talked about this years ago. When bids disappear and, sellers come in. And, for instance, I was trading a couple of small caps today for some clients, and I was buying. And you would think it would be relatively easy to buy, and it's not. It really isn't. It's still, the players in the stocks, they're not necessarily individual stocks anymore. It's ETFs, it's indices, it's futures, it's options. It's derivative-based products, and I think that really is the problem. It exacerbates these moves really quick, and you get days like today when the bottom falls out for, any one of several reasons, and, it scares people, it panics people. I mean, a VIX at 65 pre-opening, are you kidding me? I mean, that was ridiculous. I think we closed like 38, but I think it's people just get nervous, and it's that derivative leveraged effect that really drives it down.
I'm so glad you went there. I was looking at a Bloomberg Big Take story back in July about the 24-hour stock trading and how it's booming and Wall Street is rattled. You were quoted in that story, and you said, and this was basically looking at retail investors and how they're making trades basically 24 hours a day, 5 days a week, and you said we're only going to have trouble in the middle of the night when things are so illiquid. So, okay, does that continue? How do you think about where the momentum goes from here? Or does this momentum continue?
Sure. On that 24/7 thing, I think it's ridiculous, by the way, that individuals now, there are certain areas you could start trading at 10 o'clock at night on a Sunday night, individual stocks, which I think is absurd because there really is no liquidity. And you're just looking for trouble at that point. There are some caps of 20%, I think, up and down. But, for individuals, and here's the way I look at it also. The crypto market, which I made fun of for many, many years, and I thought it was a joke, and I still think it's a joke. The equity market and the crypto market are starting to merge together in this style of trading, in this, hey, let's just trade whenever we want, and we'll just zip in and out. That's not the way it's supposed to work, at least not in the equity market. If the crypto guys want to do that, good luck. But the equity market, you're supposed to have an opening and a close, and there are these liquidity events throughout the day, which helps set price, and you just don't have that right now.
What in terms of what we've seen, the unwind of the carry trade, and I've heard a lot about margin calls this morning as well. How long does that take to play out? How long do we expect this kind of volatility to stay in the equity market, Joe?
I think today was excessive. I don't think you're going to see that 65 VIX again. Not for this week, unless we see some new news. You'll get this. I don't think we're at a bottom here on this little correction. I'm going to call it a correction because I think that's what it is. I think these are normal corrections when you had a market that's been up so much throughout the year on kind of sketchy details. Let's talk about AI, right? I mean, what's really going on there, right? But I think you got a correction. It will come down. You're not going to see that super volatility that you saw today. But, it's going to take some time for it to kind of smooth out. And then we'll get the Fed later on in the month at Jackson Hole on whether May, September, and things will stabilize. So I'm not really thinking that this is a big downtrend coming. I think it's certainly something to be aware of and to be cautious of, but it's nothing to panic about like Jeremy Siegel was this morning.
Yeah, I was going to ask, what about the emergency meeting, Joe? Aren't you convinced that the Fed's going to rush in and in a panic cut rates by 75 basis points?
They only do that when Wall Street banks are in trouble. We know that, Matt, right? So right now, I don't think you have that. The banks are fine. It didn't seem like there's anything going on there. When you're calling for emergency rate cuts, it's when there is a global financial crisis, right? The GFC. We don't have that right now. We don't have anything like that right now. Everything's actually fine. We had one unemployment number, which looked a little bit worse than expected. So, no, there's no need to cut 75 anytime, I think, before the next meeting. The Fed would look nervous. They would look like they were panicking. That's the wrong signal. Now, they can get out there and start jawboning and doing like they normally do and have a few speakers come out and say one thing or another. That'll be fine for the market. And it'll get going from there.
Joe, what would tell you that there is some stress in the markets? Is it, watching financial market conditions? Credit conditions? What are you watching?
Yeah, when you look at some of those spreads and you look at junk bond yields, things like that, and you're looking for particular spikes out there, really out of the ordinary, like that VIX spike. Nothing, but to be honest, that was a bit scary in the morning. But you don't have that right now. So yeah, credit things are really the problems. Let's look back at 2007, 2008, 2009. Right, that was all credit. It was all about commercial mortgage backs. People have talked about it, but nothing really seems to be going on there. So I think at this point, yeah, there was some excessive valuations when it comes to equities, and some of the PEs were getting a little bit stretched, which is why a correction is healthy. And by the way, the guys over at Barini and Associates, they put up some good numbers, and they wrote the average correction since 1980 is 13.5%, and it lasts about 90 days. So, we're down about, 8% off the highs or whatever it might be. We're in a normal correction right now, so I'm not really worried if we start getting a little bit more fuel from there, but right now I think we're okay.
And a rotation? Do you think people are done buying these mega cap tech stocks and are going to now look for, dividend paying stocks or smaller cap stocks?
That had started last week or a couple of weeks ago, which I thought was, it was underway. We were getting going. The small caps, the Russell was finally moving. It's taken forever for that Russell 2000 to get some action. And you saw some money coming out, but it kind of failed. It was nice to see that they did bounce off the lows today. So, that was a bit scary when they were down there, but we bounced nice and we closed okay, which was important, I thought. So,
off our lows, right? Off our lows.
Yeah, off the lows. And you didn't get that dump. I thought a lot of people were expecting kind of what we call a dump at the end of the day. And you didn't get the dump at the end of the day. You kind of just stabilized where you were. Yeah. So that to me is positive. I just noticed the overnight, actually after hours action was a little bit positive in the indices. So let's see. I think let's not panic, but I don't think let's not be too complacent either. We still got to worry a little bit.
Don't tell the rest of the guests, but we saved the best for last. But don't tell anybody. All right, Joe Saluzzi, you're the best. Of course, co-head of equity trading over at Them is Trading. This is Bloomberg. Joe, thank you.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Key victory for the Justice Department today. A federal judge in Washington has ruled that Google's payments to make its search engine the default on smartphone web browsers violates U.S. antitrust law. Today we saw shares of Alphabet, parent of Google, down by 4.6%. It was a brutal day for tech names, including NVIDIA, Tesla, and Apple. NVIDIA today down 6.4%. Apple was down 4.8%. Tesla tumbled 4.2%. Dan Ives is a senior tech analyst with Wedbush Securities. And on surveillance this morning, he told us he is sticking with the mega cap tech names despite today's selling.
This is the biggest test that we've had clearly in this tech bull market. And I think in terms of what I would need to see to be less bullish, do we see fundamental breakdowns? Now, we didn't see it from earnings. We're not seeing it from our checks in Asia. We're not seeing it in terms of what the demand outlook looks over the next 6, 9, 12 months. And as long as that stays, that's why I believe it's a buying opportunity for the high quality, large cap names that we like to buy in these types of periods.
You can hear more of the conversation with Dan Ives of Wedbush on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. Today we had the NASDAQ 100 index falling by 3%. To put that in context, S&P also lower by 3%. CrowdStrike Holdings says the leadership of Delta Airlines failed to respond to an offer for assistance in the wake of last month's catastrophic system outage that led to thousands of canceled flights and a federal investigation of the U.S. carrier. On a day when techs were selling off, we had CrowdStrike shares gaining 1.9%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. More Business Week coming your way in just a moment. First up, though, we do need to get an update on world and national news. A lot going on. Let's check in with Nancy Lyons. She's in our D.C. bureau. Nancy, take it away.
Thanks, Carol. Florida Governor Ron DeSantis is warning residents heavy flooding is expected after Hurricane Debbie made landfall early today.
We have been approved for federal disaster assistance. Our pre-landfall declaration was approved. Our National State Guard are ready for search, rescue, and humanitarian assistance as needed.
Again, Florida Governor Ron DeSantis. Debbie has been downgraded now to a tropical storm and is expected to move over Georgia and South Carolina and then stall, bringing as much as 2 feet of rain to the region this week. It looks like a governor will be Kamala Harris's running mate. Reuters is reporting that Harris has narrowed her choices between Pennsylvania Governor Josh Shapiro and Minnesota Governor Tim Walz. Bloomberg's Irv Chapman reports on how the Harris campaign is gearing up.
Harris had one principal need in making her choice, political analyst Laura Brown said in a Bloomberg interview.
What is important for the vice president to shore up are Republicans who don't feel they have a home within the Republican Party. There are right-leaning independents and there are Republicans uncomfortable voting for Trump and supporting a Trump-Vance ticket.
Up in the air is the prospect of debates between the candidates, Brown said, as Donald Trump wants a studio audience of Fox viewers. And ABC plans to invite Harris, even if she's on the platform alone. In Washington, Irv Chapman, Bloomberg Radio.
Secretary of State Antony Blinken is urging all sides in the Middle East to avoid escalation as fears grow of an imminent Iranian attack on Israel following the death of Hamas leader. This is the State Department's Matt Miller.
Any further action by Iran just raises the risk of increased tensions. It raises the risk of further response from Israel or from other parties, and ultimately gets us into this position that we have worried about from the beginning, that you get a conflict that can spiral out of control.
Again, the State Department's Matt Miller. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Matt.
All right, Nance, thank you so much. There's a lot of Matt Millers in this world.
I know. There are actually a lot of Matt Millers at Bloomberg. So I constantly get messages for like other Matt Millers.
I know, right? Like off the top of my head.
And there's, you know what's funny? My wife's friend in England is married to a guy named Matt Miller, who was also born on November 5th, 1973, exactly the same day as I was.
That's kind of freaky. Do you have a twin?
His email address is only different, he puts his middle initial in. I won't say what it is.
Okay.
So I always get his emails about like soccer stuff, and for me, soccer is like the most boring sport on the entire planet.
So what do you do? Just forward it to the other
I
Matt
always
Miller?
message back. I'm like, I'm not that Matt Miller. I live in New York. I don't play soccer,
It's like a little cuckoo. How are you thinking about this day? I'm thinking about tomorrow's
It
open.
was pretty crazy this morning. I'm relatively calm now. I wouldn't be surprised if enough people buy the dip.
I find it wild that you were freaking out a little bit.
I was overnight. I was kind of freaking out because I watched the Asian markets open last night, and it was a free fall. And it just reminded me a lot of the financial crisis. I was thinking, oh my God, Dow down 1,000 points. I actually just saw that headline on CNBC. So the Dow actually did fall 1,000 points, but it doesn't mean as much now as it did then.
Correct.
Right?
Correct. It's
Yeah.
2.6% lower. I'm curious about what happens tomorrow, what happens to the rest of the week. I think this is going to be an interesting month, right, as we get to Jackson Hole. And I think data point to data point, we're going to kind of live from one to the next.
Yeah, absolutely.
Get an idea.
It'll be interesting to see,